Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Wednesday, November 5th, and my name is Raleigh White, and I'm coming to you live from yet another beautiful fall day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be is going to be covering a range of important topics with a focus on time spreads. Specifically, he's going to be talking about what is a time spread and when's the best time to use it. He's going to share why time spreads are effective, especially during earnings, how to execute and enter a time spread order, how to manage and liquidate a time spread, when and how to leg out of a time spread in a worst case scenario. And then he's going to show how he uses the data miner to quickly identify time spreads with the click of a button. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, and we do have some ground rules. Number one, be kind and supportive in any of your postings. Number two, always keep to the topic. Number three, no political discussions allowed whatsoever. Also, folks, please keep your side conversations to a bare minimum, and so that the rest of us can focus on the education and the information that Roger's sharing, because folks, he's giving his time today and he's here to give us an edge in the market and to help us all become more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock Eastern time for Roger's pre-market briefing, we note that there were several catalysts on tap that we need to pay attention to. In the chip sector, we noted that AMD was down 4% and SMCI was down a whopping 9%. On the technology front, ANET was down 11%. On the industrial front, Axon was down 17%, and Johnson Controls was scheduled to release earnings before market open. On the healthcare front, we saw that Core and Humana were also scheduled to release earnings before market open. And then we have Japan, where the Nikkei was down 4.7% on valuation concerns and on AI bubble concerns. On the Fed front, we noted that we had some reports coming out today. ADP payroll was coming out at about, I think it was about 8:15, 7:15, somewhere in that time frame this morning. Then we had ISM services coming out right around 10 o'clock and crude oil data at 10:30 this afternoon. Now, as it relates to catalysts, some people wonder, why do we even focus on these catalysts? Well, Rogers catalysts are basically focused on information that is either known or will be known that is associated with the S&P 500's largest companies, okay? And that information is either known or will be known, but the market hasn't reacted to it yet. So from that standpoint, we just to be on watch to make sure that maybe we don't tie up too many investments in an area where news or information might work against us. So that's why we focus on these catalysts. All right. Now, the next thing we talked about is Roger shared with us his small cap watch list. And on today, he had 6 of those for us: NVVE, SMX, CHR, ZDAI, MTVA, and XAir. Now, let me go ahead and bring up my other screen here, and let's take a look at how these small caps are doing today. All right, folks, you can see here I have an 8-panel chart, and here are the 6 small cap stocks that we're focused on. In the upper left-hand corner, we have NVVE, and let's see here. The pre-market open high was at 42 cents. The market opened up and has been drifting lower and is not making a move towards this level whatsoever. In the middle here in the upper row, we have SMX. The pre-market high was $2.85, and it's just been basically chopping and moving lower since the open, not even coming close to sniffing this level. In the upper right here, we have CHR, and the pre-market high was right there at around 31 cents. And we can see it's just been chopping here sideways on very little volume. Nothing happening there so far either. In the lower left-hand corner, we have ZDAI. And on this one, the pre-market high was right at 81 cents. And once again, it just opened and has been moving slightly higher, but not really threatening to break through this level. In the middle of the lower row, we have MTVA. The pre-market high was $1.61. It's opened up and moving sideways and slightly lower. Once again, not even coming close. And finally, in the lower right-hand corner, we have X-Air. The pre-market high was $2.71, and it also, like the other small caps, has really not done anything whatsoever. So from this perspective, once again, nothing with the small caps today, just like yesterday, we had nothing in the small caps either. So let's come back to the presentation and just want to let you know that with regard to small caps, Roger identifies these based on price action and extreme volume in the overnight session. And when we say extreme volume, he's looking at volume that's as much as 100 times what the normal volume is. Also, folks, if you consider taking any of these trades, only trade them during market hours. And if you don't have a fill before 2 p.m., just forget about it. It's not worth getting a fill later in the day. And if you do get into any one of these trades, never hold these positions overnight because it's just not worth the risk. The next thing that Roger shared with us was his outlook on the large caps, and he gave us 11 shorts. Once again, pretty active here today, 11 short stocks, and he gave us 14 long stocks. Now, in the long stocks, we noticed that WST has an asterisk, which means that Roger identified this as a really nice A-line setup for those of you that are trading A-lines. Now, the interesting thing or the key thing that you need to know about Roger's large stock watch list is that these are legitimately tickers that he has his eyes on. And if any of these tickers approach levels or setups that he really likes, more than likely those stocks will be issued as live alerts in his trading pit and other premium services that he has. So this watch list, once again, constitutes exactly what Roger's got his eyes on as we come into the open of the market. And you're here in the VIP room. One of the nice things is he does a midday review and he'll update what's on his short and his long list, provided that we have time to cover that today. Now, as far as Roger's pre-market comments were concerned, he noted that coming into the open that the markets were slightly down. As we opened up the room, they were just slightly down, nothing major there. He did note that the bonds were moving lower and they were sitting at the 50-day EMA, and also that the VIX had paused right below the 20 level. We then looked at momentum, and he shared with us that 61% of the stocks in the S&P 500 are below the 50-day average, and that 48% are below the 200-day average. So from this perspective, once again, not a lot of upward momentum there. He also shared with us the pull to call ratio, showing that puts are dominating in activity. As a matter of fact, that put to call ratio charts was all the way down at the bottom level there, indicating that the puts were dominating. And from that perspective, it just like call buyers were just exhausted. But at the end of the day, he just basically says, look, I think the bears are getting ahead of themselves at this point in time. And I'm fully expecting at this point in time that there's going to be a consolidation, which is not a bad thing, and then a potential to move ahead of that. He said the other thing to do is to keep a pretty sharp eye on all the indices right at the 15 and the 8-day exponential moving averages, because that's where they were basically resting there. And are they going to consolidate? Are they going to move higher, or are they going to drop lower? This would be tipping off what would be happening today. So today's agenda for November 5th, 2025, Roger's going to be focusing on time spreads. He's going to tell us what they are and when to use it. He's going to share why time spreads are effective during earnings. He's also going to share with us how to execute and enter a time spread order. He's going to share with us how to manage and liquidate a time spread. And then this is very critical, how to leg out of a time spread if we find ourselves in the worst case scenario. And then he's going to show us how he uses data miner to quickly identify time spreads with the click of a button. And with that, folks, let's go ahead and say hi to Matt. Let's say hi to Roger. Hey, guys, good midday to you. Roger, interesting coming into this morning. Anything catch your eye? Any surprises at all this morning?
Not at all, actually. No, no, not at all. Actually, well, you know what? I don't want to lie. I like what I was seeing. I was expecting this, but not to this degree. I was expecting to see this between by tonight, tomorrow. So actually, it is happening as I am seeing it, but it's happening faster than I expected it.
Okay.
If that makes any sense. It's like somebody put me on a little fast forward device. That's kind of where I'm at right now, and that's worrying me. Let me just quickly share my screen, and I'll tell you why that's worrying me. It's worrying me because we're moving really well right now. What it's concerning me, I drew this trend line here several days ago, and there's an 8-day moving average right there as well. So I want to see price action move above this area and start getting. And I didn't draw this morning. I drew this several days ago. This line. I want to trade above that line. We need to get above that line. But as far as a recovery, this is looking really great. I was thinking we're going to just kind of come around here, chop around a little bit, and then maybe in a day or two start flirting with this. But we're already flirting with this, so it's actually better than I expected. So nothing bad at all. Just want to see us get past this. If we can get past this, then we have a shot at really seeing a rally. Excuse me, like seeing a really, really strong rally. Give me 1 second. I just need to put my lights up at the thing. It'll just take a second. Matt, why don't you talk about the market for a few seconds and tell everybody what you did this morning?
Yeah, we had a nice long this morning. We ended up getting out in the nick of time because we had another pullback, and then we've gotten this nice run up at about 11:20. I was noticing on the news or the squawk box that this rally is somewhat supported by the betting markets online. Remember if it was Polygon or one of those. The odds that Trump was going to win his tariff battle in the Supreme Court today started really dropping. So I think that could have been a cause for this kind of nice bid up that we've had. Because there's a distinct change in the volt. That is the biggest thing. It got much more aggressive after that announcement.
Okay.
Yeah, but the U.S. dollar at the same time. With that said, the U.S. dollar has here. Let me show you guys. The U.S. dollar has been what is going on here? Has been moving right to here futures. It's been moving right to par. It's right at par, and in the last few days, it's been moving here. You could see how strongly it's been moving. So the market's like certainty. Okay, the market's like certainty. Now we're above the 200-day. We're above the
Mm-hmm.
200-day moving average, and we're at par. And you could see we broke out of this range. So to me, I'm interpreting this as the market thinking that we are in fact going to have the Supreme Court is in fact going to rule in Trump's favor. But I don't think we're going to find out for months. I don't think it's something that they're going to tell us today. I think it's something we're not going to find out for months.
Roger, I read that it could be mid-December or early January before a final decision is rendered. And once
Yeah.
again, as you said, nobody knows for sure,
No,
but that's
no,
just an article that I read as
no.
to when. But the arguments are today,
Yeah.
and people are paying attention to the questions
Yes.
that the Supreme Court justices, and they're trying to read the tea leaves, is
Yes.
what they're
I'm trying
doing.
to read the
Yeah.
tea leaves too, because this is probably the most important decision that this is probably the most important thing that has happened to our country since our president has been elected. Because we all know how important I'm talking about financial markets. I'm not talking about politics.
Right,
Because
exactly.
yeah, I'm not
Financial
talking about
markets.
politics. This is really important because think about it, folks. Tariffs, no tariffs. Tariffs, no tariffs. Do you think that's going to impact the market? Duh. Let's think about that one for a second, right? And again, this is not a lot of I'm noticing that people don't like to hear what I have to say. They just pull the political card on me. This is not political. Has
Mhm.
to do with tariffs. This has to do with this is
The
the market.
legality
Yeah,
associated with
this is
that.
whether
Yeah.
the and again, I'm going to tell you exactly what I've been telling you for the last 6 months. Legally, legally, he does not have a feather to stand on, and the Supreme and the appellate court and the other court has agreed with me, but we have not. Most of the decisions we've been seeing in the last year have been political, not judicial. So I have no idea what's going to happen. I have no zero clue what's going to happen, and don't try to twist it or say that I'm saying something different. I have absolutely no idea. I have
Hey,
no
guess who
idea.
joined us, Roger? We've got Kane in the room with
Oh,
us.
Kane,
Kane,
there you
it's
are.
great to see you, buddy.
Yeah, sorry, I didn't. I was looking for you in the beginning when I joined, and I didn't see you, and then I minimized my so I can get more screen space, and I did not see you. How are you, Kane?
I'm doing great, thank you. Yeah,
What
we
do you
just
think
had
about what do you
a
think about all of this?
the Supreme Court.
Yes.
I,
What's
uh,
your
I have no idea what they're going to do. I mean, the way the country is supposed to run is that they're supposed to come to an independent and legal decision to interpret the law, right? And then,
yes?
but who knows now? It's so
Yeah.
political these days, so you
Yep.
have no
Yeah.
idea.
That's my point of view too. So I have absolutely no I have I have no clue because we're kind of like in our own little world right now as far as politics. So I'm just going to leave it at that.
Yep.
Okay. All right, and I'm really glad you're here, Kane. It's always good to see you, and always good to get your feedback on the market. The market's actually looking. I was just telling Raleigh the market's actually looking a little stronger than I expected it to be today, and that's a very
Yeah.
positive thing. I thought we were just going to kind of hover around here for a few days and then start coming up here. But I like the volatility. I like the upwards momentum we're seeing today. I like what we're seeing. Right, right, Richie. Pull out the crystal ball. Exactly. But if we need to break this area right here, we need to break this because if we don't break this area, I mean, we're already at the 15 days, so that's great, and we're defending this line, but we need to break this. Now, if you look at the QQQ, same thing, and I drew the exact same line right there. See the problem? It's exactly like this, and I'm
Hmm.
hoping this doesn't turn into, and then we just start consolidate. Theoretically speaking, we have a little channel here. We have an ascending triangle, so a little baby ascending triangle. So we could consolidate here. I would really like to see us break out above here ASAP, like ASAP, right? I agree with you, D. I couldn't agree with you. Profit, that's it, just profits. So the scenario one is we consolidate here, and that's already good because that will means we're staying above this level. But what I want to see is break up a breakthrough. Let's see if mags are up there. See, mags are already partly past that. As soon as we can get past this area on the mags, we're good. But this is looking pretty good so far. I mean, I'm not complaining. I'm not complaining at all. I just want you guys to understand that. Let's look at RSP. Still building a base in this area that near the low. Would love to get above right here. Would love this to get above here. But so far, I'm cautiously optimistic. What I don't like is the bond market breaking down.
Yeah, that's the thing that caught my eye
Yeah,
also, Roger, was that divergence between the bonds and the SPY.
yeah, yeah. It's really diverging, and this is bad for the stock market. But the stock market doesn't seem to care. Okay, the stock market just doesn't. Yeah. So we'll see what happens here. We'll see what happens. This is something. This just tells us. Kane, do you remember last time you were here? I don't remember if it was last week or the week before. I think it was the week before. Because I think you were gone last. Yeah, I think you were gone
Right.
last week. And remember, I was asking you. I was really my. You probably remember this context that I was asking you about what the implied level for the December rate cut was.
Yeah.
And do you
Yeah, it was
remember
really high,
what my
man.
comments was? My commentary was, I feel like they just bunched them together into one, and I feel like they just bunched them together into one, and they're just kind of like dealing with December like it's a done deal. And I was
Right.
and everybody was treating it that way. And I'm like, Kane, what is the numbers? And you were like, well, it's priced in. I was like, yep. And now it's what? It's 65. This takes it below 70%. This was 70. I know it's below 70 now. It has to be probably 63, 65%.
Yeah,
But
you're spot on.
right on. Okay, there we go. And remember what I told you guys. I drew this for you in anticipation of this happening. Remember?
Mhm.
Remember? There's a lot of support here. I drew this, I extended this, and I said there's a lot of support here. So I don't think we're going to go lower. And I don't think we're going to go lower for several reasons. Number one, we're already near the 200-day moving average. Okay? That's number one. That's a fairly reasonable level for a sit and wait when we don't know what's going to happen. Okay? Number two, we have a lot of as Kane would say, there's a lot of gamma over here. There's a lot of stuff here. There's a lot of stuff here. So my scenario is we're going to chop around here. I'm just going to extend this a little more here. We're just going to chop around this area right here. That's what that's what that's what I think is going to happen, and that's what I thought was going to happen. And also, not just because of this, but because we got two or three levels of support right below us. So, and I don't think institutions would want to take the bonds. I don't think the institutions would like to take the bonds lower in ahead of this meeting with the Fed being closed. I think that's just way too much uncertainty to make any kind of big move. So I think right now they're going to be kind of keeping it close to the vest to see what will happen. Kane, what do you talk to me for a few minutes? What do you make about all of this? The market, give us your 5 cents.
Yeah, I think you're spot on. I don't think that they can make a big decision on TLT. What'll happen is whenever the government actually reopens, then there's going to be a sudden need to finance things in the budget, right? They're not allowed to spend right now. They're already over budget, but they are kind of spending at least on some things. So they're going to need to finance that. They're going to probably start issuing larger than normal auction sizes on the treasuries. And if that happens, then that's going to the likelihood of rates being lower or yields being lower is higher. So you're just going to be wait and see. You might see a big reaction when the government opens back up, but for now it's chop.
Yeah, I think so too. And just to further what Kane said, a lot of it has to do with the fact that you need things to come out to drive the market, to drive the economy. Remember, folks, what causes the stock market to crash? Credit crunches, credit financials. The Fed isn't coming out with anything. The market, this is like wood for a fire. You know what I mean? It doesn't necessarily mean that we're going to drop if it doesn't happen, but we could stagnate. So I just don't see a lot of orders coming in a potential point where we may stagnate. Matt, do you have anything to add to that?
No, I think you pretty much covered it.
Yeah, I thought so. And again, folks, remember, I'm not making any major I'm not reinventing the world here, okay, or reinventing America. I'm saying some pretty conservative. This is all pretty much in line with basic technicals. Not seeing any storms, but I am concerned that the Fed now is in uncharted territory.
Right.
You know what I mean, Raleigh? I mean, what is it now? What date are we in? We're in
Well,
36
normally, coming up this Friday, we should have an employment report, and that'll be the
big
second
one.
month in a row that we don't,
Yeah.
have any of that data. So as you indicated earlier, we have to rely on things like ADP report and things of that
Which
nature, which are indicative, but that's not the
they
baseline
are
that people
off.
make decisions on.
No,
Yeah.
no, of course not. They are off just as much as they are on. I could tell you some crazy ADP numbers we've had right before right, Ken, it's a record. Thank you, 36 days. So yeah,
I think I'm just going to say it's an embarrassment as far as I'm
I
concerned.
agree with you. It's not a good
But
look for us.
setting that aside, as you said, we're here to focus on how do we make the most of the situation that we're in. and we don't want to dwell on how we got here, but once again, we're looking at the data, we're looking at the charts, we're looking at the information, and the sources of news that we're used to relying on, specifically the Fed, it's just not there.
Right. 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 So, yeah, it's just not there. So again, to be honest with you, I'm a little surprised that we've seen this much firepower in the last 2 weeks. First couple of weeks, you think they're going to open up again, but it's been a while. People are getting fired. My wife is in tears, and this is market my wife has a charity, right? Ukrainian charity.
That's right.
My wife yesterday got 2 phone calls from women who went to the supermarket with their Snaps card and they were denied. They have 3-month-old children, right? That's not what this country. And again, I understand it's both sides. I'm not blaming anybody, but this creates a lot of stress in real people's problems.
Yes.
This is beyond politics. I mean, women, kids, hungry. This is not. It's not good. It's not good. And again, I'm not blaming anybody. It's just the situation that we're in. But it's not. I don't remember America ever being in this this type of situation. That's exactly right, Stacy. Thank you. That's exact. No one in our country should go hungry.
Not with our bounty. Yeah.
Yes. With everything you guys are saying, it's sad. It's really sad. And I mean, it's one thing when we're reading it in the newspaper. It's another thing when your wife is talking to a woman and the woman's like, I don't know how I'm going to feed my kids. And honestly, that to me is a lot more important than politics. Okay. Yeah, it's true. This happened yesterday. This is yesterday. I mean, we took care of her. That's why she runs a charity. But come on, that's just not right. That's not right. Okay, all right. Enough of that. Enough of that. So I wanted to also share some really good news with you guys. I'm sorry, I don't mean to get off, start talking about negative stuff, but it's reality. It's where we're at right now. The top billionaires made $698 billion this year. Well, he's not giving anything to these people. All right, so I got some good news for all of you guys. I did not know when we tried to stuff Data Miner before with goodies, it started getting really, really slow. But this version of Data Miner that we just launched, it's completely different. It's web-based and it can handle a lot of data. So I asked Matt a few days ago to put in all the highly liquid tickers. So I figure we'll get 1,200, 1,300, which would include pretty much the Russell 1000 and maybe another couple of hundred stocks. Well, Matt came to me yesterday and said something that I didn't expect. Matt came to me yesterday and said that it has much more capability than basically it can take whatever we want to put into it. So you know what I told Matt to add? You guys are going to love this. I told Matt to add every optionable ticker symbol into Data Miner.
Matt, this is the way he rolls, right?
Yep.
Hey, he's going to open that door. I'm going to go walk right through it. So it may take an extra day or two, which is absolutely fine with me. Take 2 extra days, but that's the ticket, right? Right?
That's incredible, Roger. That's amazing.
Because now we can do time spreads and seasonality on small caps, large caps, mid caps, no caps, whatever, if it's optionable. And I don't trade non-optionable. I mean, I wouldn't even look at a non-optionable stock. So this is really, really great. Okay. This is really, really great. See, I told you guys we're going to make a lot of updates.
Yes, you did.
So how about that? We're going from, see, we don't just make little updates. We go from to what the hell is this? So it's all Clyde. Clyde did it all,
Go big or don't go at all. That's what
exactly.
We're saying
So
here.
folks,
Yep.
Matt, is this true, Matt? Confirm, because you sent me this, but I don't know. Is it true?
It's true.
All optionable stock. You see how excited he is about it, right?
Well, I mean, Roger, what that means is that the data miner is going to have an incredible universe of information.
Yeah, and then
And
wait till I start.
incredible, and we're going to be mining it.
Yes. So we're going to go from S&P 500 to every optionable stock. It's a lot of stocks, and that means for all the good. That means for all the good stuff. That means for all the good, all the good stuff, all the good stuff. Okay. So I'm very excited about that. It's going to happen in the next. It's happening right now. Matt it takes him a little bit to obviously crunch the data and all that, but it's happening this week. It's happening in real time. Basically, the designer is just sitting there waiting, going, "Come on, Matt, give me the data. I'm going to put it." Do you even need the designer for this, Matt, or you're just doing this on your own?
No, I can do it all on my own.
Oh, well, see, we don't even need the designer for this. So as
And
soon
he
as
doesn't
Matt,
even have his overalls on. I mean, he's doing this
exactly,
in just normal attire.
exactly. So
Piece of cake.
as soon as Matt gets that done this week, we're going to be in hog heaven, and then I'm going to ask Matt to put another maybe 150, 200 ETFs in there that are really, really liquid because we're now trading a lot more ETFs, so because of data miner. So it's opening the doors. This thing is fantastic, fantastic. I'm very, very excited about this. Okay, so what I want to do is I want to show you stocks that I'm liking today. For all of these stocks, we want to go out about 3 to 4 weeks, and we want to use a delta, an option of about 0.70. And I'm going to show you all of these stocks right now, and then I want to talk about time spreads. I want to explain to you guys time spreads. Okay. All right. Well, it's easy with time spreads, Michael, and it's easy with the watch lists. All right, so this is going to be. I'm really excited, like really, really excited, because the only thing that stops me from using data miners sometimes is the fact that I'm like, well, I don't look at S&P, I look at everything. So I have one question about data miner, and that's how to find 10 stocks on the left. Well, that's just seasonality for now, but I'm going to add other stuff to it.
Hey, close your chat, buddy, and
Yeah, yeah,
focus.
yeah. It's not over, and it's not overwhelming because data miner does no, it's not overwhelming at
No.
all. Not if you use it the right way. Okay, let's start with the short side. Nike. By the way, just as a overall theme, and Kane and Matt and Raleigh, please feel free to jump in. This is a class for everybody. I want you guys to participate. But I'm noticing a common theme, and this theme is not going away. I'm noticing weakness in a lot of retail and a lot of consumer staples overall. Persistent weakness, persistent weakness. Not like 2, 3 days. I mean, like persistent weakness. That's not great. That's not, because think about this. These are things we need, right?
Yes.
Consumer staples, things that we need. And I mean, obviously, we don't need Nikes, but are people going to stop wearing them? Well, look where the stock is right now. I don't know if that's because of competition or because of the economy, but typically Nike is a high flyer. So this is not a good look. Copart. Another bearish stock. Now, would I day trade this stock? No, I probably wouldn't day trade this stock because it's real choppy. But it's a great looking swing stock, and it's not overextended. Procter Gamble. We were just talking about consumer staples. Look how important it is to read charts. Look at this. You think it's going to be a massive breakout? It lasts one day, and then the thing just reverts back to its normality.
Absolutely.
Charts, my friends, charts, they don't
I
lie.
wonder how many people chase that big white bar.
Oh, I was just
Yeah.
you literally took the words out of my mouth. I was thinking exactly the same thing. Do you know how many people how many algos and stops and all of it triggered right here through the 100-day, through the 50-day? So many people ate it right here. So many people ate it from right here. We would never take this trade because we're below the American flag, but a lot of people ate it right there. FOMO Joe was in full swing right here. All right. So this is a nice looking stock, PG. And again, these stocks have continuously been going down. KHC, nice looking stock. This one looks better actually. Another consumer staple stock. Breaking down right there. Boeing, below the 200-day moving average. It's not great. Notice the highs are getting lower. Do you see that? Highs
Yeah.
are getting lower. That's something I look at. To me, that's very important. So you see this high is higher than this is higher than this. If this was up here, I still would not take a pullback because it's off of a lower high. You don't want to take pullbacks off of lower highs. Not that I were to ever take it. The context is not here. But just FYI, assuming this was above the American flag up here, for example, I would not take a pullback from this. It's too steep and it's off of a lower high. I like pullbacks from swing highs. Pullback from swing highs tend to give us a better reaction, okay? It's a good rule to remember. I think that's one of the first things I ever taught Matt. I think that was like one of the first things I ever taught him. Do you remember, Matt? That was years ago.
Well, a long time ago.
Long time ago, like long, long time ago. Pullbacks from swing highs, not see how here the highs are getting higher, which is nice. It broke down, but still. All right, breaking down. We're breaking down right here. That's News Corp. Cart, Cart, Maple Bear, another consumer stock, retailer, not looking great. Not looking great. So there's a lot of consumer stocks that are just not looking good. Now, I'm going to give you my upside list. Some of these stocks may seem a little overextended, and the reason why is because I'm giving you my upside list for my day trading stocks and my swing trading stocks. These are all the stocks that I posted in the pit so far, so you could see exactly the kind of stocks that I'm targeting. Okay.
Okay.
Lumen. Lumen. It's a nice looking stock. Now I gave it as a bonus stock actually in the pit because it's below $20 and it was down on the day when we gave it. But it's a very nice stock. I like this stock. I do like this stock. Every one of these stocks that I'm giving you right now on my long list is stocks that I either traded today or wanted to trade today at some point or basically like was salivating at. Okay. STX. All right. Nice. By the way, let's see how these stocks are doing on the day. Near all-time high. These are all Pro Trader dashboard finds. Every one of these was found with the Pro Trader dashboard today. WDC. Day trading stock. This was a day trading stock. A little overextended. Almost. Not overextended, but starting to get there. This is still okay for day trading. These are all strongest stocks this morning from the Pro Trader dashboard. CNC. This wasn't. This was not. This is a stock I'm looking to swing trade. I would wait for it to fill this gap right here, actually. So you could trade it till the gap, but if it gets up here, you don't want it anymore. But for a swing, it looks okay. MRVL, Marvell, beautiful stock. I may want to take this as an overnight today. Also, still near all-time highs. I mean, on the day. PSTG, nice A-line, Matt. Do you see that?
Mhm.
I could see the excitement in Matt's face. Swing high. Very nice stock. Very, very nice stock. I like the stock a lot. That still has some time for earnings. Hey, you guys might remember this stock from earlier today. What do you guys think?
Yeah.
You guys remember this stock from earlier today?
You bet. Google.
Yeah, we took a Google trade today in the pit. And by the way, it still looks amazingly very nice. You could have taken profit. You could have taken profit twice on it, by the way, already. But nonetheless, it looks really good here. Here was the trade, real quick. We were pretty busy today in the pit. All right, go long Google, fill 283.13. Take partials on Google, 284.15. And Google went up to 284.78, 79. So it went up a little higher. And I told folks you could still hold on to it. If you want to hold it for a swing, it's got more upside. Okay. Google looks really good here. LRCX, another one I really like from the Pro Trader dashboard. Look at that. Are you noticing a pattern from stocks from my Pro Trader dashboard? Every one of these stocks is from the Pro Trader dashboard this morning. And then CLS, another one. I like all of these stocks, by the way. Really like Google a lot. There's one that this one, CN. This one still looks really good. The only reason I didn't take this one and I took Google was because it was very spready and the options were very expensive.
Mm-hmm.
Otherwise, I would have taken this one actually. This was my first choice. But we can't have it all. All right. Now that I've explained this to you guys, I'm going to explain to you time spreads, and I'm going to show you time spreads on data miner.
Quick
So
question, Roger,
yes,
before you
yes,
move on.
please, please,
Question
please.
here from Mo basically said, hey, when you say take partials, what do you mean? Sell and buy again, or is it just take profit on part of your position?
Take profit on part of your position and raise your stop loss to break even, or leave your stop loss where it is.
Okay.
Mentally, don't put a physical stop loss mentally. That's what we're talking about. Okay.
All right. Thank you.
Yeah. Yeah. And again, remember the pit is it's very quick. It's for people who are around. Remember what I always say, the pit is a bridge between. The funny thing is about the pit is if you were to be in the pit and you only took every trade as a swing trade, you would still have probably 4 times as many trades as you do in any other program, and you still would have a win rate over 80%.
It's true.
That's the funny thing about the pit. People are like, but you day trade there a lot. I'm like, yeah, but think about all the stocks you would have cleaned up.
Well, and all of you, Roger, people know you that, every stock you look at begins life as a high quality swing trade.
Every
Yep.
stock I showed you today began here. I don't even, when I look at the scanner, I only have my daily charts up. I don't even begin to look at the intraday
At
charts.
the intradays. Yep.
This is a conclusion. Is it now or later or maybe or no? This is, do I like it? Am I interested in it? Am I looking at pursuing a deeper relationship with this person? Okay. All right. So let me explain to you what a time spread is. And in order to do it, I'm actually going to give you an actual example. Okay. So this stock comes out with earnings after the closing bell. Okay. Now, by the way, let me see what the spread is right now on it because they might have already taken a profit on it. Let's see. 28, 152. Let me see here. Did anybody taking profit on it yet? No. Well, there you go. People are thinking about this profit. Okay. Anybody take profits? I'm just asking. I'm just looking. I haven't. I'm just asking if you guys have. So let me tell you what we did. Okay. Let me share it with you what we did here. Okay. Up 10% so far. Okay, cool. So look at the implied volatility on the 17 call. Now remember, when we did the spread, it was at 17. It ran up. So the price was like right around 17. We did it about an hour ago, okay? So the first thing I want you to see is, now folks, please pay attention. I'm going to take you through the process, okay? You see the implied volatility on 17? It's 206%. How much higher is 206% than 125%? It's not double, but you could see it's more than 40%. This is more than 40% higher than this. That's a fact. It's almost 75%, 80%. So you don't chase it, Terry. It's already past that price. And we got a lot of fills. Like I got email, like tons and tons of emails filled at 21, filled at 20, lucid at 20. All these are lucid's fills, all of these. So we got a lot of fills. People got filled. This one, people got filled on. Okay. And I said fills are coming in between 19 and 21. So look at how expensive this option is in comparison to the same option that expires in 9 days. Okay. Think about this for a second. 200, 213, almost 214% implied volatility versus 125. This option can almost finance this option, except for 20 cents when we got in between 19 and 21 cents. That's where the fills were coming in at. 20 should have been ideal fill. So look here. Look here. This was only 20 cents more expensive than this. Now it's 24 more cents expensive. If it goes to 28 cents, 27, people will start taking profit before earnings comes out, which is the best way to do it. Okay. So what we want to see is at least a 40% difference between them, okay? A 40% difference. Here we have much more than a 40% difference. We have almost 75% difference. So that's there. The bigger the difference, the cheaper the debit is going to be when you take this trade, okay? So 50% of the time, we get filled on our exit before earnings comes out. Now, if you can get filled and take 20 to 30% profit before earnings comes out, you should do that because you have no risk. You have no earnings risk because you don't know what's going to happen during earnings, okay? Then we look at, so this checks, this marks the checkbox, right? Well, we got one more thing to figure out. We need to know in the last 20 quarters, at least the last 20 quarters. And here you could see there was just now, there was a 20-cent spread. Right now there's 20, it's going for about what we paid for it right now. So you also have to know in the last 20 quarters what the expected move after earnings is versus what the actual move. And we got to make sure that X amount of times we don't supersede that move. Now, I don't think Lucid is an S&P 500 stock. So I don't think we have this in Data Miner yet. But I have our source, and I looked at our source, and the source says we have failed to beat expectations about 8 out of 10 times. So we failed to beat those expectations that means the price should stay in the range about 80% of the time, okay? So here's my question to you guys. The implied volatility on this option is 216% right now. Here's my question. The option has 2 days to go. What do you think the implied volatility will be on this option tomorrow after earnings come out? What do you guys think? What do you guys think? What do you think it's going to be? I can give you a good estimate. I could tell you that it's probably going to be in this range right here.
Yeah, the consensus from most people here, from everyone, is much lower. It's going to drop.
It's not a consensus. It's a fact. It will be much lower. The question is how much lower. I expect it will be lower. That's not a consensus. That's a mathematical certainty because they're all expecting something right now. So it's very high. But after earnings, there's nothing to accept. So we go back to historic volatility, which is right here. It's about 70, 80. So after that, this is going to drop to 70, 80, 50%, at least 50%, at least overnight. So let me ask you, what do you think this option is going to be worth tomorrow? Assuming the price stays exactly where we're at right now. What do you think? Let's just say that tomorrow earnings comes out and price is at 17.47. Well, I'll give you a clue. It's going to have to be over 47 cents. Okay? It's going to have to be over 47 cents. It's probably going to be about 70 cents, about 70 cents. And half of that is intrinsic value. Now, what do you think this option is going to be worth? This option still has a week, 9 days to go. Tomorrow, it's going to have 8 days to go. So probably worth about $1, maybe $1.10.
Mm-hmm.
So if this is worth 70 cents and this is worth $1.10, that means the spread is worth 40 cents. How much you pay for it? 20? Didn't I say it's now worth 40?
Mm-hmm.
Let's say it's not worth 40. Let's say it's worth 30. And you pay 20. How much moolah did you just make? You just made 50% return. Pretty good, right?
Excellent.
Now, let's say worst case scenario happens. Worst case scenario happens. Tomorrow, Lucid opens up at, I'm making this up as I'm going along. I have no idea. I'm trying to illustrate a point. So don't Alex doesn't go to my webinars often enough. What do I tell you guys? What do I tell you guys to do with these spreads? What broker do I tell you to use? What broker do I tell you to use with these spreads? Let's see if somebody remembers. Let's see if anybody remembers. I'm gonna let this go and see if anybody remembers. No. Yes. So who are you gonna call when you do time spreads? You're gonna call Tradier. Why? Because let me show you something. Pricing. Who are you gonna call? You're not gonna call Ghostbusters. Alex, you're gonna call Tradier. You're gonna call Tradier, and you're gonna pay $35 a month, and you're gonna thank them, and then your fees go to zero. Capiche? Are we all on the same page now? I said it many, many times. Not the first time I'm saying this. All right. All right. We all on the same page now again? This is probably the 50th time I'm telling you this. So I don't want to hear about your commission. Save that for somebody else. I gave you choices. All right. Call Tradier and stop paying commission. Sorry, Alex. What can I tell you? But most people are here in America. All right. All right. So back to what we were talking about. Let's talk about Lucid. So let's now go back to our scenario, okay? Let's go back to our scenario. Let's say, folks, I'm teaching you how to trade earnings without getting your head handed to you right now, okay? I would be paying very close attention to what I'm saying right now. So let's say tomorrow, Lucid opens up at $100. At $100, okay? You're going to look at your account, and this option is going to be worth 100, and you're going to have a huge debit in your account, and you're going to freak out, and you're going to want to curse me out in 10 different languages. But before you do that, I want you to remember that you're long this call here, and this long call, everything this loses, this gains. Capiche? Everything this loses, this gains. And you only have 7 more days than you do on the one that you're selling. I know, John, I know. John's like, I had 280,000 debit once. I know, but you got a credit right here, and your margin clerk knows it. Whatever you have a debit on here, you'll have a credit here. So what do? Well, you don't call Ghostbusters. This option will be exercised fast. And your broker, your clerk, margin clerk will say you have an exercise. So what you do is you tell him to exercise yours. They cancel each other out. You pay a commission. You eat your debit, your 20-cent debit, and you go on your way like it never happened. Does everybody understand what I just said? That's the worst case scenario. I just explained to you what happens if this goes to 100. What if it goes to 1,000? Same thing. What if it goes to 0? Your debit is only 20 cents. You never, ever, ever have a higher loss except for commission fee than your debit if you exercise. Okay? Well, let's take a look at something. Let's take a look at Hood. I don't think they're 50% or 40% higher. I don't like that. It's not enough of a discrepancy. So rule number 1 doesn't pass. Yeah, I could tell you why you shouldn't take the APP trade. Is APP a S&P 500 stock, Matt?
I believe so, but I'll double
Instead
check.
of me showing it to you, why doesn't Data Miner show it to you? Sean says no. Pio says yes. No, is it an S&P 500 stock, I asked. Very, very simple. Yes or no? No, then, yeah. Well, I'll tell you why. Because joined this year, okay? Not in Data Miner. Okay, yeah. Well, because it outperforms its earnings expectations 80 times. So while you have this going you have prong 1, You don't have prong two. That's why I want to put all optionable stocks in there. So we don't have to worry about, we can check any stock we want like this. So you asked what's the reason? What's the reason? What's the reason? The reason is it outperforms its range 8 out of 10 times, which means you should be thinking about straddles and strangles on it, not not time spreads. Okay, hopefully I answered your question.
I
All
think what
right.
she was clarifying, she was coming back to fees. She says Hood does not charge option fees.
Oh, good.
So it's like a separate discussion there.
Okay, gotcha. So the reason we did this stock is because we have our implied volatility and it only outperforms its expectation 2 out of 10 times. The other one outperforms 8 out of 10 times. So you need to watch it. So the rule is really, really simple. The rule is really, really simple. Like really, really simple. Okay. You look for two things. You look for implied volatility on this week. You need to have weekly options. Then you need to have implied volatility at least 40% higher this week than next week. Then you need to, and this is the part you need data miner for. Then you need to see how many times the stock in the last 20 quarters has stayed within its range after earnings. In other words, based on the implied level that's priced into the earnings. That information, my friends, is not easy to find. Okay, and we're going to be putting that into data miner. So we already have it in data miner for the S&P 500, but I need to put it in for data miner for all the other stocks, and that's coming in right now. Now, in light of that, speaking of data miner, so big announcement, data miner. So what did we cover today? We covered how to set up a time spread. I walked you through the Lucid setup. I walked you through the two factors that we need, the implied volatility and how many times it's been around. And Matt, do me a favor, share your screen and show folks how easy it is to have this on data miner. Just pick an S&P stock. I don't know, pick a stock like that's coming out later this week, like Apple, for example, or something like that.
Yeah.
But share your screen and just show folks how easy it is. And remember, in the next couple of days, we're going to have all the S&P 500, all the S&P, I mean, all the stocks, not just the S&P 500 stock. Basically, if it's got options, we're doing it. What do you think about this, Kane?
That's great. I mean, getting that data, like you said, it's not easy to get that data, and it makes it a lot more tradable once you have that data.
Yeah, very, very tradable. So, folks, that's all coming your way, like ASAP. Okay, Matt, take us through an example. So here's Apple, okay? When is Apple coming out with earnings anyway? Anybody know? Let's see. I just don't have the date here in front of me.
Looks like they reported a few days ago, last week.
Who's okay? Let me see a big cap that's reporting this week. I want to find a big cap. I'll find one right now. Let's see. AVGO. I want to find one that's reporting, not already reported. Hold on. Hold on. I got it right here. Okay, let's look. Let's see. We have McDonald's. McDonald's already came out, or they're coming out
I think
tonight.
it
We have
already.
Qualcomm. We have Qualcomm, Matt. So why don't we check on Qualcomm? Okay. Qualcomm is I believe S&P 500 stock.
Yeah, AVGO.
There we go. Okay, so Qualcomm is coming out tonight. So let's just check right now. Okay. What's the let's look at time spread analysis. Okay. This week, next week. So we have about 40-50% increase. We're good there. And what is our success rate? 75% of the time it stays within range. That's a good time spread. That's a good time spread. All right. Good time spread. Why not add earnings date in data miner?
It's coming.
Michael, are you never mind, Michael. Forget it. I'm not even going to bother with that. Michael, you got to wake up sometimes, man. So we have the earnings data for every S&P 500 stock, and now we're going to add all the other optionable stocks, Michael, as I've been saying for the
No,
last.
he's saying the date of earnings.
Oh, the earnings date. The earnings date.
Yeah,
Yes, yes, the earnings date. Yes, 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 yes. Can you put that
it's
in there as
coming.
well, Matt?
Yeah, it's coming.
It's
It's
coming.
coming.
Okay. Yeah. Good. That's what now I understand what you're talking about. Okay. All right. All right. So, yeah, now I'm going to share my screen and just look quickly at the time spread potentials here. So, Qualcomm is setting up actually for a nice bullish move. Okay. So, yeah, we have this. We have 180. It's you could do this right now for about 95 cents. You could do it for about 95 cents. Okay? 95 cents. I'm giving you a ballpark. 95 cents. Okay? Oh, I'm not sharing. Sorry about
Okay.
that.
Yeah,
Let me share. Let me share. Sorry, sorry, sorry. Let me
I
share.
like your Winthrop shirt.
Kane, did you see my shirt today?
I'm just noticing it now.
Yeah, exactly. From Trading Places.
Yeah, that's
That
awesome.
is vintage, Roger.
Yeah, it's been a while. So here's Qualcomm, guys. The only hesitation I have is it's setting up nicely right now, but it is what it is. So here you go 180. You'd sell this one for 525, and you would buy this one for 615. So I'm just, using kind of just ballparking this 95 cents. So, and if Qualcomm stays in range, this is going to be worth nothing this is going to be worth $2 tomorrow. And this will probably be worth about $4 or $5 tomorrow. Okay. 98 cents. Okay. Yeah. I'm not 180. Yeah, 180s. Sorry, 180s. Yes, 180s. 180s about 98 cents. Yeah. And if I was to buy these, and I don't know if I will, but if I was to buy these, I would put a profit target of about a buck 25 on them and leave them alone, GTC. Okay? All right. Now, I'm going to give you a full class right now, a full class on data miner. I'm going to cover all of this stuff in great detail. This is going to be the last day that we are doing this class. I highly, highly, highly recommend that you guys pay attention. And all right, let me share this here. Advanced PowerPoint. Let me bring this in here. Oh, my thing fell apart. Here we go. And we're going to start. And folks, if you have any questions while we do this, this is great for reinforcement. This is really good for reinforcement. And if you have any questions while we do this is going to be the last day I'm doing this. Raleigh will have answers for you. Okay. He
Mhm.
will answer questions, and then I will come back after I'm done with this, and I will answer any questions for you. Okay. This is really important stuff. I really want you guys to pay attention. Don't go anywhere. I'm going to give you a lot of seasonal dates, and I'm going to give you a lot of red meat. Raleigh, can you see my screen okay?
I certainly can
All
see
right.
you and hear you clear.
All right. Let's do this,
And
baby.
just before, just a real quick thing here, folks. The session that you just went through is on YouTube and obviously in Zoom. For those of you that would like to see an instant replay, go to Roger's YouTube channel and you can see that there because it is instant. All right. Now, more than likely, we're going to edit this and add it to the members area, in the near future. But if you want to see immediately what Roger just talked about today, you can go to his YouTube channel. I just posted it there, and you can bring that up and you can watch that at your discretion. I'm sorry, Roger. A lot of people are just fascinated on this subject. And obviously, any quality education that we have, we'll edit it, format it, and put it in the members area.
Yes, perfect. By the way, that stock Lumen that I gave you earlier today, Lumen, the first stock that I gave you on my watch list, that cheap stock, the $11 stock, it's breaking out right now.
I think STX and WDC as well. Just some people posted that they're doing well as well.
Okay,
A
cool,
little bit
cool. I
early.
want to make sure you guys make money. We've actually been on a pretty good roll this morning. All right, folks, please pay attention. Omar, I will see you later. Thank you for being here, and I'll post. Actually, I already posted your results for today. All right, folks, let's begin. And again, let's thank Kane for being here.